I now hand the conference over to Mr. Arafat Sayyed from Reliance Securities. Thank you, and over to you, sir.
Thanks, Faizan. Good afternoon, everyone. First and foremost, I hope you all are keeping safe and healthy. On behalf of Reliance Securities, I welcome you all for the conference call of RITES Limited to discuss Q4FY20 results. From the management, we have Mr. Rajiv Mehrotra, Chairman and Managing Director, Mr. Pramod Narang, CFO, Mr. B.P. Nayak, Director of Finance, and Mr. V.G. Suresh, Director of Projects. Good afternoon, gentlemen. First of all, thank you for giving us the opportunity to host this call. Without any further ado, I will hand over the call to Mr. Rajiv Mehrotra for initial comments, post which we will open the floor for the Q&A. Thank you, and over to you, sir.
Thank you, Mr. Arafat. Good afternoon to all of you. I am Rajiv Mehrotra, Chairman and MD of RITES Limited. I am happy to welcome you all to the investors conference call on RITES Limited's financials for FY20 and the fourth quarter of FY20. Hope all of you and your families are keeping well during these tough times. I have with me our Director of Projects, Mr. V.G. Suresh, Director of Finance, Mr. B.P. Nayak, and CFO, Mr. Pramod Narang. As you know, RITES is a mini Ratna Category 1 Schedule A public sector enterprise and a leading player in the transport consultancy and engineering sector in India, having diversified services and geographical reach. RITES Limited is the only export arm of Indian Railways for providing rolling stock overseas, other than to Thailand, Malaysia, and Indonesia. Now I am going to talk about the highlights of company's results of FY20 and Q4FY20, and then we will open the forum for questions and answers. I hope you all had success in accessing the presentation we have uploaded on our website for investors' information, as well as the press release we made yesterday and the financial results submitted to stock exchanges. In case any help is required, feel free to contact my team on these issues. Gentlemen, after having a strong growth of 37% in FY19, financial year 2020 has also been a very successful year for the company, and it has achieved its highest ever consolidated revenue and profits, with a revenue and profit growth of 22% and 29% respectively, and thus comfortably we have beaten the initial outlook given of growth of 17% for this year. Company achieved operational profit margins of 23.25% against the target of 23.2%. So we have been able to rather better the margins this year. I'll now summarize the results on consolidated basis. And as you know, almost 97% of the business standalone becomes a part of the the consolidated has almost 97% coming from stand-alone. So whatever I'm talking is relevant for the stand-alone also. I would not repeat the numbers of stand-alone, which you have been able to access through the detailed presentations and submissions made yesterday. On consolidated basis, the company's total revenue has grown to rupees 2,735 crore as against rupees 2,240 crores in FY19, registering a growth of 22.1% YOY basis. Company's revenue from operations has grown by 20.9% to 2,474 crores from rupees 2,047 crore in FY19. EBITDA and PAT have grown by 19.6% and 29.3% respectively, and now stand at rupees 929, that is EBITDA is 929 and PAT is 633 crore consolidated. EBITDA and PAT margins stand sustained at 34 and 23.2% respectively. These margins are the result of a strategic focus on order execution and increased human resource productivity. The earning per share stands at rupees 24.64 as compared to last year's rupees 18.78, up by 13.2%. And please note that this is on the increased capital 25 crore shares post bonus issue done in 1920. Performance of our subsidiary RENCL has remained almost flat with revenues of rupees 81 crore against rupees 83 crore in the previous financial year. Revenue from this subsidiary has got impacted in Q4FY20 due to low demand from railways during lockdown period, especially the March end part of it, and certain maintenance work required in the windmills in the previous season of generation, that is April to October 19. Our wagon manufacturing joint venture WPL has achieved a profit of rupees 16 crore with revenue of rupees 265 crore during FY20. The wagon manufacturing joint venture, this is the sale, has produced and rehabilitated 1,066 wagons during the last financial year. One or two more comments which are relevant to stand-alone portion. Driven by exports and leasing and turnkey construction business, our operating revenue has grown by 21.9% to 2,401 crore from rupees 1,969 crore in FY19. I will now talk about the Q4 standalone results. The Q4 FY20 total revenue on stand-alone basis stands at rupees 596 crore as against rupees 765 crore in Q4 FY19. The export and turnkey segments have shown a very good growth till Q3 FY20, and we have been able to exceed our yearly targets as a result. The revenue of turnkey is moderated due to lockdown and the last month targets could not be completed. The targeted export shipments were mainly completed till Q3 FY20 and therefore less exports were scheduled for Q4 FY20. Operating revenue excluding other income stands at rupees 553 crore as against rupees 714 crore in Q4 FY19. EBITDA and PAT margins stand at 31.9% and 22% respectively, which have been improved from the last year on account of better margins from consultancy. I would also highlight one or two more points in Q4. If you see the PAT of Q4, it is 131 crore as compared to 133 in Q4. So although there is a fall, a visible fall in revenue, almost 169 crore rupees, but the profit has not impacted because of two reasons. One is the main fall mainly came because of turnkey reduction by about 91 crore rupees. And as you know, the turnkey is the lowest margin business, and we more than offset this in our Q businesses of consultancy and turnkey and leasing, etc., and exports, of course. So the PAT numbers look stable comparable to FY19. I'll give an overview of the segmental analysis. Consultancy is our key segment. Company generated a revenue of 1,066 crore against 1,091 crore in FY19. Consultancy has given a gross margin of 44.9%, which is better than 43.9% of FY19. Consultancy remained almost flat due to various reasons, including disruptions in March 20, and also certain projects, foreign projects, suffered due to lockdown. Some projects we have overseas, they also had a lockdown impact. Q4 has remained flat, but has seen better margins from consultancy despite less revenue due to restrictions in March 20. I now come to leasing. Company's leasing business on account of increased client base and additional local requirements by existing clients has shown a steady growth of 16.5% over FY19 and recorded income of 121 crore in FY20. Leasing business margin has remained healthy at 38.6% during the year. Q4 FY20 has shown a growth of 6.3% as compared to Q4 FY19. This year, we have added 62nd locomotive to our leasing fleet, up by 6 from last year. I now come to exports. Exports revenue during the year FY has increased significantly that is by 161.6% over 541 crore done in FY19. I'm sorry, I will repeat this. Exports revenue during the year FY increased significantly by 161.6% and stands at 541 crore as against FY19 exports of 207 crores. Export margins have been at 22.7%. In exports, we did two major, I will say, achievements. We completed the supply of 6 diesel multiple units, demo we call it, train sets to Sri Lanka. And as a result of good quality, they placed repeat orders on us for 2 more, which are under manufacturing now. Also, we completed supply of 10 locomotives during last year. Another important development in exports is that we have forayed into Cape Gauge market with 706 crore rupees export contract of demo train sets and locos to Mozambique. This we became successful sometime in January, end of February beginning, and we concluded negotiations on video calls and signed the agreement in June. This is a significant transaction because this is first such contract from India for Cape Gauge, and it opens up about 16 countries for exploring the export business now, which are on the Cape Gauge. Cape Gauge is 1067 mm, which is not used in India. During the last quarter, exports have decreased against Q4FY19 due to major shipments completed till Q3FY20, as stated earlier. And in any case, very less exports were remaining for Q4 of FY20. There's some impact on the export margins in Q4 because of provision of one item, 5.45 crore rupees, against a recoverable from a client, which he has agreed to pay. I mean, this could not be settled in time earlier. So we have provided, but I'm sure it's likely to be settled in FY21. So we still provided for it because it was more than 3 years now. Turnkey construction. The revenue from turnkey construction projects has reached rupees 673 crore in FY20, with an increase of 18.7% over FY19. Turnkey segment gross margins stand at 3.4%. Revenue in Q4 FY20 has decreased because of some disruptions in March, and here also only when the milestones are completed, the inspections by Commissioner of Railway Safety are done, and then only this becomes a billable item. So there were certain inspections scheduled for March end, but they were deferred, have been done in June now. Order book. You'll be happy to note that company's consolidated order book now stands at rupees 6,223 crore as of 31st March 20, with new or extension of orders secured of the amount of rupees 2,457 crore during the year. This order book gives us revenue visibility for next 2 to 3 years. While this order book itself gives us enough headroom to go ahead, we are also catching whatever opportunities are coming in infrastructure sector, both at domestic level as well as abroad in the areas we are operating. You would have noticed that we signed one agreement with IRFDC for 24% equity stake in that company. The disbursement has not yet happened, and once everything is implemented, we'll have one director on their board, and we hope to get some more engineering work from that company as well. You would have also noticed one important transaction already notified by us, that Government of India has mandated our subsidiary company, RENCL, for installation of 3,000 megawatts of solar energy generating system. There are 3 transactions in this, and for the first 2 tranches, we have already put the tenders on 31st May and 15th June. Dividend. The final dividend of rupees 6 per share has been recommended by the Board of Directors for the year FY20, making it the highest ever annual dividend of rupees 400 crores, that is rupees 16 per share, with a dividend payout of 67% from PAT, or if you compare with, say, a price level of 250, dividend yield is around 6.4%. With this, I think my submissions to you are over. Now we can open the forum for questions and answers. Thank you very much for your attention.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Reminder to the participants, anyone who wishes to ask a question may press star and 1 on their touchtone telephone. The first question is from the line of Jonas Bhutta from Phillip Capital. Please go ahead.
Hello.
Yes, Mr. Jonas, please go ahead.
Hi, sir, and congratulations on a great set of numbers despite the challenging environment. I have two questions, sir.
Yes.
Firstly, margins in the leasing business, sir, for the past 2 quarters has averaged around 33% or 34% versus the earlier trend of say 43-42%. Has there been any change in terms that is related to this margin, or this is purely just quarterly aberration and we can expect those 40+% margins back in the following year?
Well, I think we have set around 38 to 40% sustainable margins. There's no change in the terms. At times, you end up buying some spares in some particular month or quarter. That could have impacted, but I have no reason to worry. So this is some natural correction has happened and not a significant change in the pricing of leasing product.
Sure, that is helpful. So my second question is on this plan to build a 1 gigawatt solar power project.
Okay.
If you can give us details on what is the kind of equity infusion that is expected out of RITES or REMCL, what is the capital subsidy, and what will be the power purchase rate at which you are going to sell that power. That's my first part of the second question. If you can answer this, and then I'll follow it up.
This may have to be a slightly longer answer, but it's important for I think all the participants. This 3 gigawatt transaction is in 3 components. Component 1 is on railways land and on developer model. So the developer has to put equity, and our job is to see that it is done correctly on the land, and then connections and all those things are done as per the technical specifications. And then we get around 7 paise per unit. We are negotiating for 7 paise per unit every year for the power transmitted from there to the consumption centers. So that is the revenue model for this component where no equity is involved from REMC. So this is tranche 1 or say case 1, where developer would put investment. Our job is only to supervise and to then see the supply management at a fee per year. This is now second category, or I will say the plan 2 in this scheme is again 1 gigawatt, where the PSU investment model, because this company is owned by RITES and railways, since more than 26% is there, this will be counted as own generation for own consumption, especially in states where the open access is not there. Or the technical term for this is captive power. So this will become a captive power generator for railways. Therefore, it is necessary to put some equity. Out of this 1,000 megawatts, we have so far identified land only for 400 acres. 400 megawatts, I'm sorry. Now, this 400 megawatt tender has already been issued on 15th June. So let us talk of the equity requirement of this component first. And this will be on equity subsidy from MNRE and borrowing by REMCL. So it is estimated that For the total investment, equity of about 360 crore rupees will be required, half of which 51% would be done by RITES, balanced by Ministry of Railways. We have not yet taken investment approval and not notified to the investors because we are in the process of just ascertaining the rates first, at what rate on railways land this would be doable. Tie up the financial. Once the financial closure is nearing, then we will, if the rates are found acceptable, then only we will go for investment approval. This about 180 to 200 crore rupees investment would again be spread over 2 years. Now this is part 2. Part 3 of this, another 1,000 megawatts is parallel to the railway tracks. There is a huge land available parallel to the tracks, and a lot of these pockets have been identified already. Some more are in the process. Now this will again be on developer mode. Railways will only buy the power. Our role is to supervise and again see the technical issues in supply throughout the life of the project, and we get paid around 7 paise per unit there also. So this scheme is very big, and this is first step. Let me tell you the potential is still more, and once we successfully do this, more such land parcels which are in the process of being identified would be opened up by railways. So that is the overall umbrella of the things to happen. Within this, equity stake for rights to invest in REMCL could be in the range of 180 to 200 crores spread over 2 years, FY21 to FY22.
So for the full 1,000 megawatts, sir, it will be 500 crores roughly.
This might actually spill over to 22 onwards, because 400 megawatts we have just tendered out. The installation itself will take, maybe once more land is available, we may go for that. And this is eligible for 20%, they call it subsidy from the MNRE under CPSE scheme.
Sure. And my allied question to this, sir, is, we've always perceived RITES to be an asset-light business model. But when investments such as this or that in ISRDC come along, does this sort of indicate lack of opportunity for the company in its existing business? So if here you can first answer that and then maybe highlight the kind of opportunities that are there in consultancy over the next 2 to 3 years, maybe, not in FY21, but if you can spread it over a 2-year period, what are the growth opportunities available in consultancy? Or should we expect RITES to become an asset-heavy business, like, it makes investments and then gets business? How should one see it?
Okay, sorry. Have you finished?
Yes, sir.
All these businesses have emerged because we are predominantly a consulting company. We are a consultant, we could spot exports. We are a consultant, we could spot leasing. We are a consultant, we could develop the open access model through REMC for railways. And since we are a consultant, we are able to do the solar or the renewable portion required to be met by railways because they are a deemed distribution licensee or a distribution company. So this is a logical offshoot of what has been done in the past for railways. And again, there you are earning. My exposure is not very high coming to the fee portion, which is consulting part, 5 paise, 7 paise per unit. So I think the predominant nature of consultancy is there intact. These are add-on businesses. Otherwise, choice before us is to go at 5 or 7% or try 37 or 22%, which we have done in the past 2 years. If you just ignore these add-on businesses, and when we come to the impact of COVID and other things, you will see that the diversity of our business actually was helpful in saying positively that even during lockdown, we kept generating wind power. Even during lockdown, we kept running our locomotives on leave. Even during lockdown, the inspection of steel rails at Bhilai continued. So if a consultant was there, he would have just operated something from home and remained low. So I think this is a part of our approach to go faster. There is no conflict with consultancy, and there is no move to shift away to asset-heavy model. In 3,000 megawatts, only 400 is asset-based. Rest is asset-light. And the buyer is Government of India. The buyer of the power is Government of India. What a risk-light investment would you see in a country like this, where the Government of India is buying power from you on 25 years basis? So I think the management has done enough exercise to see that where do we put our investments That is on the solar part. On IRSDC, let me tell you, IRSDC is a beginning. There's a lot to happen in that segment. And we as an engineering consultant hope to see make significant revenues from there also. Every station would be a huge investment, maybe 100 to a major station, 100 to 300, 400 crores. So this is again an opportunity for which investment has been done, and it has to be seen with that perspective in mind.
Sure, sir. And if you can highlight consultancy opportunities over the next, opportunities in that base business over the next 2 to 3 years, which segments do you think would perform?
The consultancy suffered in FY21. Yes, we remained almost flat or had a 2% fall on annual basis. But that's not the end of it. We have enough order book. If you see the order book, the order book of consultancy has gone up despite delivering about 1,100 crores of turnover in consultancy. Our order book in consultancy is sitting at almost 2,400 crores, which is much higher than the opening we had there. You recall there were concerns in the beginning that consultancy order book is not increasing. So we have added orders. There are a lot of orders which are in the pipeline. But since we get success, we will not declare. But I will cover again the number. The consultancy for order book for consultancy 31st March is 2,464 against opening a balance of 2,317. Similarly, in exports, 1,086 opening was where we have ended year with 1,436. So I think consultancy and exports, I see predominantly helping RITES to grow in next 2 to 3 years. And whatever exports you are seeing, it also requires a consulting component of this, design, customization, etc. Yes, please.
Sure, sir. I'll come back in the queue. Thank you for answering my question.
Thank you. The next question is from the line of Rohit Natarajan from Antique Stock Broking. Please go ahead.
Thank you for this opportunity. Sir, you said consultancy would be flat in FY21. So if I understand it correctly, are we maintaining that 100 crore revenue billing every month? Also, if you could touch upon the billing of turnkey that is happening at every month, export, and some bit on leasing.
So Rohit, I have not said it will remain flat. We have not given any quantified outlook. We have given outlook based on the order book, based on the sectoral investments as appeared in NIP. But I did not say that we are going to remain flat on consultancy. We will predominantly remain a consulting company. Now, increasing consulting by 10% is itself a big job, let me tell you, because you are just going on the fee income, which is almost 1/20th of the project cost. So you are delivering 20 times projects, then you add a consulting fee. But looking at the opportunities, we did not have enough orders from metros in last 5-6 months. So all this impacted the FY20 numbers. But FY21, we have submitted several bids. I think in metro alone, our bids, about 1,500 crores worth of bids we have submitted. And if law of probability, we must get at least a reasonable share there. So there is no reason to be pessimistic about consulting. And even today, we are the biggest consulting billing company in the country. So if we cannot grow, then there is something seriously wrong in the sector or in the services sector.
Sir, I appreciate those points, but my question was more on how this lockdown scenario has impacted your billing part.
Okay, lockdown last month, in fact, almost entire March, there was travel restrictions. People could not go to overseas. There are certain inspections done in China. There are certain inspections done in different cities in the country. So the March effect had started seeing reduced travel. And last 10 days almost no, and peak 10 days of the year were lost because of the lockdown. So whatever downfall you are seeing in consultancy was quite possible to make up if that had not happened. And there are milestones in consultancy. We just cannot do by the completion method, which is there in construction business.
So efficiency level, sir, would you want to quantify some efficiency level of numbers over there?
For FY21, we'll give the outlook in next quarter. Because let us see whether we are able to open up in July or August or not. If this goes to September, then it's very difficult to make up the entire thing in remaining half of the year. Then the industry in general would have the impact. But I'm optimistic that by July end, we should start seeing numbers returning. Then there will be a good reason to be more optimistic about the consulting part.
Okay, sir. Sir, my second question is more on the order backlog part. We were targeting close to 8,000 crore of order backlog by the end of FY20. I understand those miss is largely probably from construction segment, the turnkey segment. So is there anything that is already under talks in pipeline that immediately can be converted into an order inflow?
Yes, this is a very important question, and I would like to clarify that there was a change in policy in award of railway works to PSUs. After that revision, we have been asked to submit our expression of interest, which we have done in May. So I expect some outcome of that in July. There is every reason to believe, and that you can see even in the order book. The order book of turnkey has gone down by almost 200 crores because most of the orders are on the verge of being executed in 21 or already done in 20. So we are expecting orders, and my assessment of 8,000 crores was based on certain information I had about progress of turnkey as well as this export order from Mozambique, which has materialized already.
Sir, finally, on those export margins, sir, you said some provisions on that front, which has led to a dip in margin probably. So if you could quantify how much is that sustainable EBIT margins for export segment looking like?
This particular item of provisioning, we had one locomotive on leasing in a foreign country. This met with an accident in their own train system. And as per the contract, they are supposed to reimburse the cost of that locomotive to us. They have agreed to reimburse it. Now, because of lockdown, this is delayed, and not to get into the audit issues, we thought we'll provide for it. But this is recoverable. The client has signed as fresh as sometime in January 20 that they will pay us.
So is it fair to assume that we can spring back to 20 plus kind of EBIT margins in export segment?
I will say our guidelines on this has been 15 to 25%. So it's more 50 to 20% actually.
Sure. That's it from my side, sir. If there is any other question, I'll get back into the queue.
Thank you. The next question is from the line of Uzair Fahmi, individual investor. Please go ahead.
Hi, thank you, sir, for the presentation and congratulations for the results. My first question is around the dividends. So I looked at the long-term averages of how the company has redistributed the profits into reinvestments and dividends. And now it looks like over the past 1-2 years, the dividends have increased. So my question to you is, as a percentage has increased. So my question to you is that, is this because you have a lot of excess cash and not that many opportunities to reinvest, or you have opportunities to reinvest, but not beating a hurdle rate that you aspire to? So just want to understand on that.
Look, dividend decision is largely out of the extent of profits we have made. If we have made the best profits, the shareholders can expect the best dividend, which is the payout. This year we are offering 16 rupees per share total. 6 rupees is the final dividend and 10 rupees already paid. So we have the highest profits this year, and we have proposed a payout. Now, whether this payout is high or low, a lot of debate goes into this before the board takes the decision. Let me tell you that we have still retained about 1/3 of the current year's profit, which we will be using for investments like the solar investments or the station development. The company already has other surplus cash funds available. And I have been saying that this is an investor-friendly company. We also care for our investors. So it's a combination of profit, availability of cash, opportunities, investor friendliness, and therefore we have 16 rupees for the current year.
Sure, sir. I was looking not from an absolute point of view, but I was looking at comparing the long-term average of the dividend payout ratio and the reinvested percent, and in the last 1 year, and that looks like the percentage given out in dividend is much higher compared to the last 5 to 6 year average. So is that a management strategic thing that this is what you want to do in this year and the coming years, or or is it something else? It's just because you have this too much cash on hand?
I mean, if you are looking at last 2 years, these are the years which have given highest growth to this company, and therefore the rewards to shareholders have also been higher. We have opportunities, and we have been, despite being a consultant, we have been investing in locomotive leasing, we have been investing in windmills, we have been investing in now solar. So as the opportunities are emerging, we have investable surplus. We are completely debt-free balance sheet. So should this be necessary, we can even mobilize resources whenever needed. I don't see any requirement in next maybe 1.5 years to do that. But lack of opportunities is not an issue. Consultants are very conservative, I will say investors. We also look at things very, very minutely before we put our investments. So I think that summarizes the position on dividend, that we had best 2 years. The best 2 years have seen best 2 payouts. We have cash, we have opportunities, and we will make sure that we keep evaluating the possibilities continuously.
Understood, sir. One question on the income statement. So I saw this line, the purchases for export in the expense statement. So that has gone down from 125 crores in Q4FY20 to 2 crores in the latest quarter. However, on an yearly basis, the numbers are comparable. So I just want to understand, and also the fact that the exports have gone up in FY20 versus FY19. So why this purchases for export line has gone down from 125 to 2 crores in this quarter, and what does it indicate?
I think one general observation I'll make to before answering this point in detail, that in our business, all the milestones in construction, exports, or consultancy are not evenly spread in quarters. So it can be erroneous to draw results based on just quarter alone. And you have a full year before you. So I will request that rather have a look on the yearly margins. Are they in line with the guidance? Are they stable? Are they growing? That would give a more, I will say, correct answer than just one quarter alone. And then...
Sure, understood, sir. One final question. You mentioned on the aspiration side that the national infrastructure pipeline of 110 lakh crore. So how will RITES play a role in there? And what are your expectations in terms of revenue, or what will be the play of RITES in that pipeline projects?
I think we consider RITES as the consultants who get into the formation stage or pre-formation stage, or we call it pre-feasibility of mega projects. So before these projects go into DPR stage, normally we get into several of these projects associated. And then once these projects go for detail engineering, at that stage again we get a chance to do this. And third stage is when the construction starts, we do project supervision. It's not necessary that we get into all the 3 stages in all the projects. Maybe one in some, maybe second also in some, maybe all the 3 in some. Now, if the investments of those skills are being already spelled out, maybe there would be some delays because of the social costs which have suddenly come up in the system. But I am optimistic that the infra spending would have to increase maybe after H1, and therefore we tend to gain from those opportunities.
And when will that be? In terms of when do you expect to see any play of RITES, particularly with respect to the projects that could come up in national infrastructure pipeline? Like, what's your guidance in terms of what fiscal year, or what's the timeline for this for you to have a play in there?
It's very difficult to draw a definite correlation with the projects in the pipeline there. But to give you an idea, and I'm not committing that we are bound to get those projects. I'm just giving you a flare of the things which is already going on. For three DFC corridors, the tenders are already out. These are very high value tenders for preparing GPR. So we have submitted our tender for this. For certain metro projects also, the GC consultancy appointments are going on. We are also preparing for the investment in high speed. We will join some Japanese consultants. We are planning to join as GC partners from Indian side. So all these things are going on parallelly. But finally, in which month this will materialize and who would finally make it is again a play of competition, again a play of funds availability. But the NIP is a very strong, I will say, a guidance to look at, and then we see projects emerging out of it. And I think RITES being one of the biggest beneficiaries of this, because we are into railways, we are into metros, highways, ports, airports, and not only in India, outside India also.
Thank you so much. I have a question, but I'll wait for the queue.
Okay.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. Should you have a follow-up question, we would request you to rejoin the question queue. The next question is from the line of Saurabh Poddar from Lucky Investment Managers. Please go ahead.
Hi, sir. Congratulations on a strong performance despite the difficult outlook. Just wanted to understand, so I think understandably our order book, because of policy changes, etc., was impacted. Going forward, do you see any structural change in terms of the government's payment cycle or, your receivables front? Because, given that it's been a tough environment for the government, not only the central government, but also the state government, do you think there'll be a structural payment sort of a change in projects going forward? I just wanted to understand that.
Let me first answer this with reference to railway projects. If railways put a project for execution, normally that work would be given in a year for which they have already allocated funds. So once the capital funds are allocated, there could be few days delays here and there because of reasons. But then there's no reason to believe that this will not be funded. We rather get, I think it's right, 20%. We get 20% money upfront as the project advance and then spend out of it. So the possibility of being cash out of cash for these projects is actually not there. Yes, what can happen that there could be shift in the capex timing by the government, but once a project is put to construction, I don't see such thing happening as a policy change. No.
Okay, so there's basically, I think that was my biggest concern. And otherwise, but yeah, I think that should be it from my end. Thank you.
Thank you.
Thank you. The next question is from the line of Chintan Sheth from Samiksha Capital. Please go ahead.
Thanks for the opportunity, sir, and congrats for the set of numbers. Sir, again, on the consultancy part, when we look at margins, we are consistently improving upon it. I'm just trying to understand, if we look at fourth quarter, even our revenues were lower, we clocked around 50% kind of margins. So I'm trying to understand what can be the sustainable margins or any lever available for further improving it. And particularly for fourth quarter when revenue were lower, but margins were significantly higher.
Chintan, I will suggest that let us not go by one quarter analysis for such major pricing impact analysis. Yes, we have improved margin because there was some billing from a major overseas project, which was Metro. So that came at a higher dollar rate and impacted the margins. But yes, we remain within the outlook for consultancy fee income given. We are within that 1 or 2 percentage points because we have almost hundreds of projects going on. Somewhere 1 or 2 percentage points somewhere going up and down is there, but there's no major shift in the pricing of consultancy as such. So
Right.
you have to believe that we will attempt to maintain the margins we have seen in last 2 years.
Right. And sir, on the Mozambique, your presentation provides that we have to execute it in FY21. So we expect that entire revenue to accrue in FY21, or it can spill over to FY22?
This question I had reserved for outlook to be given in next quarter, but since you are asking, yes, although the delivery period is longer, this can be one of the drivers for us to achieve our targets, and we are trying actually to start from Q4, some part of the delivery in Q4.
Q4 of this year, FY21.
So let me clarify. The supply terms are calendar year 21.
Okay.
We only in June first week we have signed this contract.
Okay. So it's calendar year 21.
But Chintan, we are trying to see that we start, because that is going to be a help in pushing the exports this year. Maybe Q4 will target something for this new order also. We have already started working on this.
Okay.
But I'll be more specific when I give you outlook, maybe a little later.
Sure. And bid pipeline for each segment, if you can provide, that will be helpful. That will be last.
Sorry?
Bid pipeline as on date for each segment, exports, turnkey, and consultancy.
I think it would not be correct to quantify a pipeline more than what is already confirmed in hand.
Okay.
We keep applying in several tenders. Just to give an example, we have applied for 7 tunneling tenders where the value is 250 crore rupees. But this is a tender. I may get one, I may get all, I may get none. So it would be better to quantify a number to this forum at this stage. But yes, we are working all out for vehicles. We are working for major DPRs. We are working for bridges. We are working for ROBs, flyovers. We are working for highways, tunnels. We got a major order in Ladakh for 3 tunnels for road projects there. So even that segment we are trying. We have worked very hard to get a project of highway in Bangladesh. We have been declared eligible for one more rail consultancy project in Bangladesh, but all this is a continuous process. So there are enough, I can only say that there are enough attempts in the pipeline, but I would not like to quantify. I have given you a flavor of the types of things we are working on.
And we haven't signed MOU for this year with the railways yet?
No, okay, that MOU is still under discussion.
Sure, okay.
Because a lot of companies, they want to revisit the target based on the outlook for this year. And I hope this might be done maybe sometime in July.
Sure. I will join back in. Thank you.
Thank you, Chintan. Okay.
Thank you. The next question is from the line of Akshay Bhor from Premji Invest. Please go ahead.
Hi, sir. First of all, congratulations for a steady performance throughout last year. Sir, I wanted to understand RSTC model a little better. So the first question within that is RSTC going to be more of a consulting or or RSTC needs to put in capital of their own as well while developing a specific station? And within that, the participation of RITES is, I understand it's an equity participation, but are you also hoping for more work coming out of that overall station project? I mean, and if you could just quantify what's your scope of work there?
Okay, I'll start with the last point first. Yes, we do hope to get some technical work because we have a strong team which is trained in structural designs and construction supervision. So that was one of the objectives in getting there. Now, station development has been, going through different models over the last 4 or 5 years. But I know that now there is a lot of clarity on how they want to take it. They have increased the lease period up to 90 years for any property development. They have also permitted mixed use. Mixed means commercial cum residential on railway land. There are also some other, I would not preempt because that would amount to passing out the secret of that company. They are also working on an interesting revenue model which will sustain those investments. You might hear this very soon. So it's not that somebody wanted investment and we have done there. We have gone through the process. We see value coming in 2 ways, return on equity what we are putting and also engineering services. Third is that the IRCTC per se is going in a combination of their own investment, which is a limited way. They have done only 2 projects on this. They are now bidding out stations to the developers. So there they will have a revenue model from these earnings. I think it's not going to be an asset-heavy company, rather a company managing heavy assets, I will say.
Sure. So just a clarification on the solar, investment that you talked about. Is it fair to say that all the three plants put together, 3 gigawatt of plants, you would be putting in 180 crores of capital? Is that understanding correct? And
No. You asked second question, sir. Yes.
Secondly, just your revenue potential out of 3 gigawatt put together. Any rough indication that you may have?
Look, the investment of 180 crore rupees, let me clarify. There are 3 tranches in this. Tranche 1, 1,000 megawatts. Already tender is out on 31st May, maybe in sometime in July. This is on developer model. There is no capital investment, high rights or REMC. Now we come to tranche 2. Tranche 2 is in PSU mode where only 400 acres of 400 megawatts equivalent required land is available. So this tender is out for 400, which is in investment mode, and that is where 180 to 200 crores will be needed.
Understood.
And they normally would be following the CERC guidelines, investments, or the return on investment. And the buyer is railways. So there are no utilities involved. So the issues in utilities, we would be completely out of it.
Understood. No, my question was, if you go for that additional 400, 600 megawatts, will you need to put in additional capital there, or your investment is restricted to that 180, 200 crores?
Actually, what we have done, it's a very important question, and I think I should have clarified this. We have told to railways that the land you are giving us for tranche 1 can actually take 1,600 megawatts. So we have already written to them that why don't you increase this to 1,600 and reduce the capex model to 400. But should there be another land piece of another 100 or 200 megawatts, that is doable. But beyond that, I don't think REMC can borrow for the entire 1,000.
Understood. So just the revenue potential, if you can, just any ballpark number.
Revenue potential, we have notified this to be around, this was very conservatively put only as the fee component, 20 crore rupees. Because taking 5 to 7 paisa of fees would be agreed, and then this would give at least 20 crore rupees. At least 20 crore rupees per year to REMC, and there are hardly any costs with this. And maybe it should be very profitable per se, because very limited number of people will be deployed for super mechanism. So that when the project is fully on, the fee income of 20 to 25 crores plus return on equity, that's completely different.
Understood, sir. Thank you. Thank you so much.
Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 1 per participant. Should you have a follow-up question, we would request you to rejoin the question queue. The next question is from the line of Siddharth Mohata from Principal Asset Management. Please go ahead.
Good afternoon, sir. Sir, regarding this solar project, you said that once all the project is being commissioned and 5 to 7 paisa rate is being fixed, for all the 3 projects together, we will be earning 20 to 25 crore of fee income?
Yes.
Yes. Okay. So this is taking all the projects. And then you said over and above, there will be return on
equity. Yes.
And what would be that amount, sir?
Return on equity, as per the guidelines have been revised last week. So I think for first 20 years it is 17%, and then after that around 20%.
Okay.
So this will be some guidelines revised last week.
Okay.
And I'm told this is 16.45% for first 20 years, and after that 17.87%.
Okay. And this is
the operator. Sorry to interrupt you. Maybe request that you return to the question queue for follow-up questions.
No, but let me just complete this question. It's a request. So this ROE of, sir, around 16 to 17%, this is applicable for 20 years.
Yes.
Okay.
And that is not my 20 crore rupees number I said.
Correct. And sir, my final question is, what is the impact of lockdown on revenue in Q4? If you're able to quantify that amount. Thank you.
It's very difficult to quantify, but yes, it did have some effect on the consulting business. Site visits could not happen, the milestones could not be completed. Certain construction billing could not be, because there was a milestone that CRS inspection has to be completed, so that could not happen. I think the shortfall we were hit with could have been possibly made up if we had full 15 days to work. Hello?
Yes, sir. Thank you, and best wishes for upcoming quarter.
Thank you. Thank you for that.
Thank you. The next question is from the line of Dixit Doshi from Whitestone Financial Advisors. Please go ahead.
Yeah, thanks for the opportunity. So just couple of things. Firstly, earlier we were guiding that in the export segment, we would be able to do 550 to 600 crore kind of top line in FY21, since most of the deliveries are lined up for H2 for Sri Lanka. Do you think we will be able to do that much this year?
Yes, I still hold on to that number. I mean, we will have
Okay. And in terms of turnkey, there was some tendering supposed to happen in February, March among the PSUs for turnkey railway projects. Has that happened or it's delayed now?
No, they first invited expression of interest to see who is eligible for how much capacity. So they have asked how much have you executed on track work, electrification, workshop, etc. And based on that, they will decide who can handle, and then the pricing would happen. So the stage one expression of interest was over in May. The rest is still developing.
So by when you feel that the orders will start flowing in from that side?
I think in July, within this month, we expect some outcome from this.
Okay. And in terms of...
This is the operator. Sorry to interrupt.
Yeah. Okay.
We request that you return to the question queue for follow-up
Sure.
questions.
Right.
Thank you. The next question is from the line of Harshit Kapadia from Elara Capital. Please go ahead.
Good evening, sir. First of all, congratulations on a good set of numbers, sir, in this challenging time. And I hope everybody is well at the RITES family. So two questions that I have is, can you just give a revenue breakup of consultancy business which you generally give? And second question is, what could be the capex for FY21 which you can look at?
Okay. Can I speak out the consulting? I'll read out 6-7 major numbers, or you want me to repeat all? I will do that.
No, 6-7 major numbers will do, sir.
Yeah, consulting, the top earner was railway sector, 609 crores.
This is only turnkey, sir. When you say railway...
No, this is only the consulting part. This includes PNC. This includes PNC of Coal India, NTPC. This includes consultancy related to quality assurance.
Okay.
9.5. Then followed by others include all other sectors. 191. This is a high number. 191.
So generally you give for metros, airport, highways,
Airport is 47 crores, highways 67 crores, metros 39 crores, and urban transport, I think put together they'll come here, 94 crores, 94 plus 40, 134 crores metros. I will repeat.
Yeah.
The largest is railway sector, followed by other categories. There is one confidential project in this, so that is clubbed here, 191 crores.
Okay. How much is quality assurance, sir?
Quality assurance would be around half of railways work. 360. Yeah, 360 crores. In 609, 360 is quality assurance. And this got impacted in March because inspections could not just happen.
Right.
And followed by metros, 134 crores. Highways 67, Airports 47. I think these are the leading numbers. Rest is miscellaneous, port, IT. Thank you.
Yes.
Rashid, next.
The CapEx for FY21, which we...
Okay. Yeah, we have available around 1100 crores, 1102. Out of which we are keeping 400 for working. Rest is now planned for investments like this. Equity participation, REMCL, IRSDC and sale could take 200 crores. CapEx for building, including workshops for locomotives. We are going to do a workshop somewhere in eastern India. 150 crore rupees. CapEx for locomotives, 80 crore rupees. They have included dividend also, it's not capital, but then out of cash flow, we have to account for 150 crore rupees is the final dividend. For survey equipments, software, computers, etc., they have put 40 crore rupees. Rest is miscellaneous, around 40 crore rupees. So I think three major takeaways from here. We are going to start construction for our own office in Calcutta, Lucknow, Nagpur. Then locomotives, 80 crore rupees. We are going to make a workshop for loco maintenance of our leased locomotives. All this is included. And that is what we already have finalized.
Thank you, Mr. I joined the round.
Thank you.
Thank you. The next question is from the line of Mohit Kumar from IDFC Securities. Please go ahead.
Hello. Yes. Good evening, sir.
Good evening.
Only one question, sir. Are you seeing any delay in finalization of consultancy tender from all your clients, be it Metro, be it NHAI, be it power plants? And if there is any, so when do you expect it to pick up?
Well, I will not say delay in finalization. I will say they have extended dates. There were a lot of tenders which were due in mid-March to end March. All of those have been shifted, say to June. June, July submissions are happening. So we are participating in several such tenders. Yes, there is a delay of about 3 months. And therefore, the consulting work on these would not start before October, November. The work award and the documentation happens. So the new business in consulting can give returns only in H2. In H1, we are counting on the consulting works of 2,400 crores already in hand.
And what is the execution cycle of our consultancy orders, sir, if I may ask?
Typically, the consulting, if it is for a report, of course, it's a very small segment, maybe it's just 10% in the consulting. There the times would be 6 months to 12 months. But for a project management consultancy, PMC, in a typical metro project or a rail connectivity project, 2 to 3 or 4 years also in some cases.
And so what is execution cycle for our order book right now? I'm talking only for consultancy.
The total order book is 6,223.
No. So my question is, what is execution cycle for our order book as it stands now for the consultancy? Average life.
Okay. I think I will say around 2 years right now. 2 years.
Understood, sir. Thank you, sir. Thank you, and best of luck. Thank you.
Thank you. The next question is from the line of Kunal Sheth from B&K Securities. Please go ahead.
Yeah. Hi, sir. Thank you for the opportunity. I just needed one clarification about the solar project. We said that as of now we will have to invest in the 400 megawatt in the second tranche, and another 600 megawatt is still there is no clarity. If government agrees to put it under the other mode, we will have to only invest in 400. Is it right?
Yes, as of now it appears that informally they have agreed that if it is possible to get on developer mode, but I do not have any formal response as of now. But 1600 will go into the tranche 1 as you rightly got it. If not, then we will see that if we have to add for another 600 megawatts, but it is very fluid right now. So right now I don't have any commitment of equity for this portion, 600 megawatts. We will see little later.
Sure. And sir, I just wanted also to check that, as a management or at the board level, do we have any number in mind in terms of, that we will not cross, this X number, as an investment in subsidiaries or JV to ensure that we do not become from an asset light, we do not become an investment heavy, asset heavy company?
Okay. The system in which we operate, there is a delegation to the board of directors by government that up to 30% of net worth, our net worth is around 2,600, up to 30% in aggregate or 15% in each case, the board of directors can make investment decisions, and I think still we are well below that. So if I understood your question rightly, we cannot invest say more than 30% of 2,600 crores in equity in all ventures put together. If you have to exceed, then we have to go to the government or cabinet for investments.
Okay. Sure, sir. Thank you. Thank you so much and best of luck for future quarters, sir.
Thank you.
Thank you. The next question is from the line of Parimal Mithani from Credential Investment. Please go ahead.
Sir, very for wonderful numbers, sir, and thanks for the dividends since last 2 years. I'm a happy shareholder. So I just wanted to know about your consultancy fee business. If you can give a breakup of what was last year and this year, and sir, can you throw light in terms of consultancy growth this year in a rough figure, sir?
Okay. Thank you for being a happy investor. I want all the shareholders to be happy with the company. To be specific on the number, in FY19-20 consultancy we have reported 1,066. This is in comparison to 1,092 of 18-19. 18-19 1092. Current year 1066. So this is a small 2.5% fall because of. Frankly, this was interruption in March. Otherwise, I think it would have been slightly higher than this.
So I wanted the quality assurance figure for 2 years, sir. This can give me.
This year you said 340. 1 second. Current year is 367 quality assurance. Last 331.
Okay.
Last year is 331.
And so, and what percentage of the order book comes from consultancy, this quality assurance business going ahead? If you can
maybe 25 to 30%. 30%. Huh?
And so this is a recurring business, right? From the point of, because inspection will be carried out irrespective of the tendering happening or not, right?
So this inspection is for almost 40% of the purchases done by railways are inspected by us.
Okay. Okay.
So this is a continuous mandate going on for years, and there's a very strong network spread over 12 cities in India, and we also do foreign inspections for railways.
And so we are the only player which does this for the railways, right? There's no other PSU which does or the private entity for them?
So certain inspections are done departmentally, like the girders. Railway girders are inspected by RDSO themselves. The machinery, any machinery imported by them from any of the divisions or workshops is inspected by a setup called COFMO. It's again a department of railways. Other than that is with us.
Okay. And so any growth in this business, sir? If you can throw light for this year, how much would you expect from this side business the current year?
From the inspection business?
Yes, sir.
This is a direct, impacted number of the capex which railways are doing.
Okay.
And in the order book, we have taken only for 1 quarter. Yeah, it's very important to clarify that this order book has taken only 1 quarter's inspection business.
Okay, sir. That is the actually
to deliver number. And
I have no further questions. Thank you, sir. Thank you very much.
I lost attention.
Thank you. The next question is from the line of Dixit Doshi from Whitestone Financial Advisors. Please go ahead.
Hello.
Yes, Dixit.
Yeah, sir, just one last question. If you can throw some light regarding how is the billing or the work is happening in terms of April, May, and June, or even July?
Well, certain businesses were still going on in April, May, and even now. Especially the inspection work we have set up in Delhi. The rails are made. So 24 hours they do inspection. This continued throughout. It was not disrupted. So this was going on. Our leasing locomotives were going on, except one or two which had to be stabled because of the construction stopped in some portions of DFC. Rest of the locos were up and running. Then the windmill season is April to October. It has been doing a great generation since April. So you will see some revenue going on, and as soon as the construction was permitted sometime in May early, some remaining construction turnkey jobs were completed, and we have completed 11 kilometers of CRS inspection last week. We have commissioned 188 kilometers of electrification Vijaypur-Makshi last week. So all that is being completed now. What was left in March is being completed.
So can we expect that Q1 we will not make losses?
Look,
broadly,
I can only, respecting all the regulations in this regard, I will say that yes, company was still having some activity, and we will also see whether the direct, all those people who could not be deployed on the projects are still a direct cost, whether it goes as indirect cost or a sunk cost. And I'm optimistic. I will not say that we are going to. I'm optimistic.
And just last one question. In terms of consultancy, let's say whatever we could not do in the April, May, and June, can we make up for it in the second half and still do a good, reasonably good in FY21, or it is not possible?
This business we have already started. I think opening more than 1 month, Mr. Rich. Yes, more than a month that the inspections have been started. But there are some foreign inspections. There are some industrial areas where we have to go for inspection where lockout is like in Tamil Nadu. Suddenly 15 days lockout was there. In Maharashtra, certain areas we were still not able to go. There was some difficulties in West Bengal also. Some portions were not that red zone, the containment zone. So other than that, we have been able to start inspection activities. And I will say, if I can put one number, I'll say we are almost 75% up in terms of our revenue generation.
Okay, that's very helpful. Thank you.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to Mr. Arafat Sayyed for closing comments.
Thank you once again for giving us opportunity, sir, for hosting the call. I also thank all the participants who have participated in the conference call. All the best to you, management, going ahead. Thanks a lot.
Thank you, gentlemen, for being with us and raising your queries. I hope I've been able to answer. If there are more questions, feel free to write to me or to Investors Relations cell. Let me assure you one thing, that we are firmly on the job. We have good order book in hand, and the execution machinery is almost 75%, you can say, activated already. And do not go by quarterly numbers too much, because in our case, all these quarters do not have equal benchmarks for the billing. So keep this distortion while you see the numbers, and a more representative number would be annual numbers. And thank you very much. I hope we will catch up with you soon after Q1 good results. Thank you.
Thank you. On behalf of Reliance Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.